Hello friends, welcome to yet another market video. In this market video, we will try to guess where Nifty and Bank Nifty are headed for the coming week. Now keep in mind that in the coming week, we have two major events. On the 1st of Feb, we have the budget that will be presented by our finance minister. And on the same date, we also have the US FOMC meeting outcome. So these two major events are likely to add an extra dose of volatility to our markets. Now you see that India VIX has already spiked in the last two sessions. On Friday session, it was up 18%, and on Wednesday session also, I think it was up around 7% odd. So this extra volatility has already been factored in the premiums that are now quoting for our markets. Now, let's look at the Nifty and Bank Nifty chart and try to analyze where the market looks headed for the coming week. I will be using some very basic technical analysis to try and guess what the market is likely to do in the coming week. So let's get going. Let's look at the Nifty chart first. Now, this is the daily chart that I have on my screen right now. Now, this market actually was range bound between 17,750 or 17,800 roughly on the downside and 18,450 on the upside, as you see over here. Now, 17,800 was a very good support for Nifty, and it was tested on a few occasions, and bulls managed to close above 17,800 each time we dipped below it in the last few weeks. In fact, since 23rd of December, every time Nifty dipped below 17,800, bulls managed to close above 17,800, and we witnessed a short-term rally each time Nifty dipped below 17,800, as you see on this chart over here. See over here, we went below 17,800, rallied all the way up to 18,250. Again, over here, we dipped below 17,800. Again, we had a rally to 18,100 odd. Again, we dipped below 17,800. Again, we rallied to some 18,200 odd levels. Now, this support of 17,800 odd was really very critical. And on Friday's session, that is on 27th of Jan 2023, finally, bears managed to crack this level very decisively. As you all know, we have the Hindenburg research report on Adani stocks, which was out last week, and that was one of the major catalysts in this down move. Now, whatever be the reason, we have to respect the price and we have to trade the price alone. So 17,800 has now been taken out very decisively by the bears. Now, just look at these two trend lines that I have drawn on this chart. Now, first is this trend line which has been drawn connecting the June lows with the September lows. Now, Nifty had already broken below this trend line in the last week of December itself. Somehow, bulls were managing to close Nifty above this trend line for a few trading sessions, and finally, again on the 4th of Jan, we broke below this trend line very significantly yet again. And ever since then, we have not even managed to go anywhere close to this trend line. So Nifty was actually drifting sideways for quite some time. Now look at this other trend line that I have on my chart. This is drawn connecting the 1st December high with the 14th December high. When I connect these two points and extend it, this is the trend line I get. Now, this trend line had been acting as a major resistance for a few trading sessions around 18th of Jan. Each time Nifty was touching this trend line, it was reversing. Now, we just got one close above this trend line, but barely above it. So this trend line again looks to me to be a very powerful resistance on the upside. And on Wednesday's session, we actually closed below this trend line yet again. Now, as of Friday, 27th of Jan 2023, we have closed below 17,800. We are below this trend line, and of course, this trend line we have long broken. Now, look at the 200-day moving average for Nifty. This is currently placed at 17,289. On Friday, we have a close of 17,604. So this is barely some 300 odd points from here. Now, looking at the strong downside momentum that is currently there, I think there is a good possibility we could test this 200-day moving average and probably even break below it. Now, the last time we went below the 200-day moving average was in October 2022, and prior to that in September 2022 in the last week. Now, Nifty recently has been showing a very good strength actually, and any dip below the 200-day moving average has been short-lived. Now, will it be the same this time? No one really knows. But given the strong momentum that we have on the downside, I think we could break below it and probably stay below it for some time. It may not be as easy to recover these losses as it has been in the past in September and in October. Now, I would also like to draw your attention to two other technical parameters that I think are interesting. Now, I have the Bollinger Bands that I would like to place on this chart with the 2 and 3 standard deviations. Now, those of you who probably understand Bollinger Bands, now the 2 and 3 standard deviations are actually very interesting for Nifty if you actually analyze this in the historical context. Now, each time Nifty touches the second standard deviation, like you see over here in December, you see over here in the month of September. I mean, this is just some two recent instances I'm quoting. Nifty likely continues to drift lower for the next few trading sessions. Now, on Friday, we have again closed below the -2 standard deviation. Now, let's go to the -3 standard deviation. -3 standard deviation for Nifty currently is at 17,569, as you see over here. Okay. -2 standard deviation was at 17,715, and we have closed well below it on Friday. So now Nifty is also at risk of breaking the -3 standard deviation level, which currently is at 17,569. In fact, intraday, we have already broken this on Friday, and we have managed to close barely above this level. Now, when Nifty actually touches the -3 standard deviation, okay, that time also it has a tendency to move still lower from there for the next few trading sessions. Now, you can actually see this when it has happened historically. You can see that -2 standard deviation we have hit a few times recently, though -3 standard deviation probably you will see we have hit only sometime in February, March 2022, and then we have moved lower. Now, these charts can get a bit complex. So, if you observe minutely, once we hit both -2 and -3 standard deviations on Nifty, there is a tendency to drift lower for the next few trading sessions. Now, given the fact that we have the 200-day moving average placed around 17,289 currently, which is barely some 300 odd points from here, and the strong downward momentum that has been generated over the last few trading sessions, I think there is a good possibility we will head towards the 200-day moving average and probably break it as well. As always, my analysis is simply based on my understanding of the charts, and like anyone else, I could also be wrong. Trade with good risk management and trade a manageable position size. Your risk management will help you survive even if your trade goes wrong, and your position size, if it is correct, will actually limit your losses significantly. So this was my analysis of Nifty for the coming week. I will post a few more videos on the market, especially on Bank Nifty and a few Nifty heavyweights. Thank you for watching my videos. Do share your comments, and I look forward to sharing a lot more analysis about the market in my coming videos. Take care. Good luck. Thank you. Cheers.